What's up, everyone? This is Justin from nextbigtrade.com. It's Monday, March 23rd, and I want to do a brief update on gold. Some interesting things have happened so far today with gold that I think are worth highlighting. First, I want to go do a quick history lesson, and I want to show what happened with gold and gold stocks in 2008. And what I want to note here is notice how stocks topped out in late 2007 and then went into the big financial crisis into 2008, and stocks didn't bottom until March 2009. Now, what happened with gold was quite different, where gold actually went into another up leg that ended in March 2008, and then the pressure from the overall stock market finally started putting pressure on gold, and gold had a downward move all the way into October 2008. But what's interesting is that gold actually formed a bottom much earlier than stocks and resumed its uptrend after that. And notice how the relative strength on gold against the S&P 500 basically maintained an uptrend, except for the last brief portion of the major crash in October 2008, where really the meat of the financial crisis crash was from September till about early November 2008. And even gold couldn't hold up underneath that massive selling pressure that was going on across the entire market. Now, what happened with gold stocks is they went up with gold into March 2008, but then they topped out, tried to maintain the 30-week moving average for a while, even into late 2008 or late towards the summer. And then when things started collapsing, gold stocks went from in a kind of a stage 3 top all the way into a massive stage 4 crash, losing like 60% of their value within a period of like a couple months, and bottomed out right along the same time as gold, and then had a big turnaround rally. And again, they chopped around a little bit, but resumed the uptrend after that, along with gold. So this is important to note because the same thing's kind of happening right now, or appears to be happening with gold, where obviously the coronavirus panic has been a extremely sharp and fast move lower that's really had no bounces at all, and just has been just a black hole that stocks have fallen into. So what's happened with gold, though, is that gold, the coronavirus panic really started the last week of February, and you've had this really choppy price action where gold kind of tried to have a big bounce during the second week of the coronavirus panic, but then had the massive down leg the week after, another down leg into last week, but then we've all of a sudden gapped back above the 30-week moving average this week on huge volume. We've already done 25 or about 28 million shares already on Monday, and we're back above the 30-week moving average. Now, this is a very important technical development to watch for the remainder of the week. And I want to show you what gold stocks have done. Now, gold stocks, obviously, again, are always more volatile than gold and are much more susceptible to panic selling and massive washouts. We saw what happened in 2008. We saw just an unbelievable crash a couple weeks ago in gold stocks, where they went from being above the 30-week moving average to being almost 30% below the 30-week moving average in a period of 1 week. This is like price action that you'll rarely see, maybe ever in your life, and we saw it over the past couple weeks with this, massive panic. And again, look at the rebound volume that happened last week, and ultimately what's going to happen with gold stocks is they're going to follow the price of gold. So even though they're extremely beaten down right now, the price of gold is going to determine where they head next. So going back to gold, some really important things to note about what's going on with gold right now is that, if it maintains above the 30-week moving average and has a big volume week, then we're going to get a resumption of the stage 2 uptrend and the stage 2 continuation breakout. Look at the outperformance of gold against the S&P 500, like now that this panic has taken place. Like, this is showing that gold is now a leading sector in the market, whereas like after or last year we had the big renewal of the stage 2 uptrend that I traded, that I talked about at nextbigtrade.com. Like, we nailed the breakout right here. I put out a video the video was called is gold the surprise bull market for 2019, where like right as this was taking place, I was talking about a stage 2 breakout in gold. We saw this massive up leg, which turned out to be a couple of my most profitable trades last year, were like First Majestic Silver and the silver ETF during this uptrend. And then we had this consolidation since then. And if you follow me on Twitter, we've been talking about like, when is gold going to resume the uptrend? Well, this has gone on for months and months and months. We saw stocks start to, do really well. Like a couple of the big trades that I highlighted on my website during this period included Tesla, Luckin Coffee, and Zoom Video has been another recent really well-performing stock. So gold's just like taking a breather this entire time while stocks did well. Then we get the coronavirus panic, and now gold's outperforming again. And if you bring this all back together, like, notice how gold has just consolidated sideways during this entire period, basically. Now that we've had all these things take place, and we're sitting right at the 30-week moving average right again. So this really tells me that gold, all it's really done is basically put itself back in position to resume the uptrend and again be one of the leading sectors in the market. Now, but this is going to heavily depend on what happens for the rest of the week. So that's why I'm paying close attention to gold. And to wrap this up, really, as far as the gold stocks, I'm looking at the stocks that have the least amount of resistance as gold starts to break back out, because a lot of these gold stocks are going to have to rise up with overhead resistance on top of them now that they've had such a big correction. So I would prefer the stocks that have the least amount of overhead resistance, and I'm sure I'll be talking about them as well at my site, nextbigtrade.com. Again, one other thing to note about what's happened with this coronavirus panic is that, and one of the reasons I call my site nextbigtrade.com is that it's not like it's really easy right now to look in the rearview mirror and think about this panic and maybe beat yourself up for not getting out of the market or maybe not buying the inverse ETFs and making a ton of money. But you have to look at the market as a never-ending series of opportunities. And, the coronavirus panic was a very profitable trade to the downside, shorting stocks and, buying put options or buying inverse ETFs. But that trade is probably getting close to being over, and it's time to start looking for what's going to happen next. And I think gold is potentially one of the things that you really want to look at based on the relative strength and based on this, 9-month consolidation, which could be set up to produce another stage 2 continuation breakout. So thanks again for watching, and we'll be talking to you later on my channel.